So you can invest directly to oil and natural gas investment through many producers are there in the market. And if they don't find anything, you can still get the deduction of whatever cost they incurred. So there are two types of cost, like intangible cost and tangible cost. So intangible cost is like indirect cost, that is labor, any survey, then any salaries. So that cost you can claim as 100% in the same year it's incurred. And the tangible cost is the machinery that they have used for that particular activity. So on that, you can claim depreciation. And apart from that, if you are getting any income, you can still claim 15% deduction whenever you have any income from that investment.
Depreciation allowance, they call it.
Yes.
If you make 10,000, you don't pay tax on 10,000, you pay tax on 8,500.
So suppose I invested 100,000 in drilling program. Out of that, 80,000 is my intangible cost and 20,000 is my tangible cost. So 80,000 I can fully deduct in same year. And this deduction, IRS is treating as active loss. You can adjust against your regular income. Even if you have a W-2 income or 1099 income, so this loss you can adjust with that income. If you directly invest, this benefit you will get. So here if you say 80,000 I can fully deductible, 20,000 I can claim depreciation. We have bonus depreciation, so I can use bonus depreciation.
After the OBBA, it became more attractive.
Yeah.
Earlier, only 80% was allowed roughly, but now with bonus depreciation for all material purpose, 100% is allowed. So you pay 100,000, claim all of it against your W-2 income and create a cash flow for next 30 years where you pay tax on 85% because you can always claim 15% in the depletion allowance.
Suppose in future, if you are receiving 50,000 revenue from that investment, you can claim 15% as a depletion allowances. Next topic, that is gifting and inheritance.
A lot of misinformation around it. Gifting, inheritance, estate taxes, trust taxes, lot of misinformation around it. Please.
So for gifting, for 2025, the limit has been increased from 18,000 to 19,000. It means up to 19,000, you can give gifts to anyone. There is no such condition that you can give to only your family members. You can give to your friends, anyone you can give, up to 19,000 per recipient. You can give 19,000 to your son, 19,000 to your daughter, 19,000 to your friend. Everything will be excluded. But if you give more than that, then it will be adjusted against your lifetime exemption. So lifetime exemption, the limit is 15 million. This limit is from 2026. For 2025, the limit is 13.99 million. Suppose I give 25,000, so 19,000 will be excluded. But 6,000, it will be, my lifetime exemption will be reduced by 6,000. Since I gave more than limit, I have to report to IRS. There is a form called 709. We have to file that form because it's more than 19,000.
What if I'm getting the gift from foreign country? A lot of people in this country are first generation, parents are out, India, Pakistan, Bangladesh, they get gift. We'll discuss inheritance separately, but when they get the gift limit for a foreign gift, somebody who doesn't have a social security number, giving gift to somebody who has a foreign gift coming in, that limit is $100,000. Now, the other question was, okay, what if the company is giving the gift? That limit is much lower. If a foreign company is giving the gift, the limit is not 100,000, then the limit is 20,000. Roughly, it's in rupees, so in local currency, $20,300 is the current gift limit if a foreign company is giving the gift. The other thing you want to understand, the gift filing obligation, gift tax, let's say hypothetically I'm giving $20 million gift. How much tax do I have to pay? Who has to pay this tax? The person who is giving the gift. The gift tax obligation belongs to giftor, not giftee.
Now let's move to inheritance. So gift generally we give during our lifetimes. Inheritance is the asset that passes at the time of death or after death via will, trust or beneficiary designations. So what other differences are there? So if you transfer any asset via gift, so the basis for the transferor, for the transferee will be the basis of the original base. That is the basis of the transferor. But if the same asset, if you transfer via inheritance, the basis will be fair market value. So suppose, I'll give you one example. Suppose I have a property, I transfer that asset of $50,000 via gift to my son. Okay. So for my son, the basis will be 50,000. If he sold that property for 200,000, there will be a capital gain. So capital gain will be 150,000. He is going to pay capital gain tax on it. But suppose this same asset, if I transferred via inheritance, the basis will be increased. My basis will be fair market value. So now the fair market value is suppose 200,000 and he's selling at 200,000. He's not going to pay any capital gain on it. So the basis will change in gifting and in inheritance.
So the practical situation, if you want to relate to, we have a lot of clients with older parents and they come to us. My mom is too old, my dad is too old. He wants to gift this property to me. And we say, how many siblings do you have? Are you worried that you will not get the property if you don't have the gift now? I mean, in order to save taxes, you don't want to lose the whole thing because somebody else will take it. So take the gift. But otherwise, taking gift from the parents is not a good idea. If it comes to inheritance, once they move to the next life, they get the fair market value as the basis. So you don't pay any. So if you sell the asset in theory at the time of death, you don't pay any taxes. Fair market value is the value that you can sell it for. So it's not, if you have the option, gifting is avoided in favor of inheritance.